Hey, it's Clay, and this will be a video chart on ticker symbol BYND. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So while this here may look like several days worth of time, it's actually today's price action broken down into 30-minute time slices. I like to do this time frame that does a good job of telling the quote-unquote story of the price and then makes mapping out our levels of support and resistance a bit easier to see. Did this analysis on Tuesday, so that is where these red line annotations are coming from. And that also brings about the first update that needs to be done. And this update is just based on a foundational rule in charting which states when levels of resistance are broken and closed above, you want to see them act as support. And especially in this case, 135, I would say, is pretty important. Why is it so important? Well, first off, there's no doubt about it. You got to give credit where credit's due. From where the price was right here to where it is right now, I mean, the price has certainly made a very respectable bounce. But that does lead to the valid question of, okay, yeah, it's made a bounce, but is there any sort of actual true power behind this bounce? Or is this just one of those dead cat bounces? And I have no idea, but by using 135, that can really help us out. Hopefully we can all agree on the logic that price movements with genuine strength, with true power, so if a bounce is truly going to be a bounce, well, the price needs to keep on bouncing, right? Or in other words, the price is going to need to make progress forward. And if the price goes back to where it was, well, that would be the exact opposite, right? And that would just be, that would contradict itself. So keep in mind $135. And let's say that the price were to come down here, break down through there, and then just continue on down. Well, at that point in time, from a very literal perspective, that would be putting the price right back inside of that range that it just broke out of. Again, going back, not a sign of true strength. Whereas let's say the price goes down, because nothing can go straight up. So it goes back down here a little bit more, behaves like this, and then starts to work its way back upwards. Well, what would you have in this situation? You'd have a set of lows right here. You'd have that set of lows down there. If you envision each of those as stair steps, well, hey, now you have stair steps making progress in the upwards direction. And that's what a true strong move is going to do, right? That's what a bounce is going to do. It's going to keep on bouncing. It's going to make progress forward. So in this situation, the quote-unquote progress point being defined as 135. As far as areas of resistance, nothing new here to report from the videos I've done in the past. Talked about 150 being that area of resistance, and surprise, surprise, the power of charts. You can see that's right where it was essentially rejected from today. So I'm not saying the price can't break above 150. I'm just saying, apparently, according to the story that's being told to us via the chart, the price is really going to need to bring its A game if it's going to be able to not only break above 150, but stay up above it. But all in all, definitely a nice bounce. Now it's just a question of, can the bulls build upon this momentum going forward? We will see. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.